now we are joined by Shyam Srinivasan, the MD and CEO at Federal Bank, to talk more about that. Thank you so much, sir, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show. And obviously, congratulations overall on the 250 branches in Tamil Nadu and Pondicherry. What is your plan overall in terms of expanding the physical presence for FY25? How do we see the growth there?
The good news is in FY24, which ends 3-4 days from now, we would have added close to 140 branches, which is a 10% expansion. We started the year at about 1350 or 1360. We'll end the year at 1500 branches. So it's been a mega blockbuster year in terms of new branch addition. And I think a similar momentum will continue into FY25. Whether it's another 100 branches or 150 branches, a matter of timing and opportunity. But in terms of growth, it will be yet another strong year for expansion of our footprint. In select geographies, we think we have reasonable presence now in the south. We're looking at increasing our presence in west, in particular the bigger metros like Mumbai and adjacent cities.
Also, sir, if you could tell us that will you be able to maintain the lending growth momentum that we have seen in the past in the next financial year as well?
As you probably have noticed, we have been growing roughly in the 18-20% per annum for the last few years. Economy is expected to grow anything between 7-7.5% for the next few years. Normally, banking credit grows 2x of economy growth, so it is quite possible that India credit will grow between 13 and 15%. We usually grow faster than the market. So it's natural to expect us to grow anything between 15 and 18%. Having said that, we just have to continuously watch if there are any air pockets in the market. We have to be careful. Otherwise, growing at 15-18%, closer to 18% per annum is very possible for the bank. The expansion we are doing both digitally and physically gives us the right to keep growing. Our belief is that our growth has been quite decent in quality, and most importantly, it's all round. We don't focus only on one area of the business. We look at multiple areas, whether it's commercial banking, corporate banking, or retail, and that will continue. Areas like microfinance, gold, commercial vehicles, retail credit have grown faster because we have a small base. I hope that momentum will continue into FY25 as well.
Okay, and then do you see an improvement in the NIMs as well going forward?
See, I think for a bank of our size, both are important. We have to get the margin right and the growth right. So it's always going to be a mix and match. Certainly, we would like to ensure that in a falling rate environment, we don't encounter a situation of NIMs falling. We've been managing that reasonably well. We expect in FY25 also to keep that momentum going. We would look to see some uptick in our margins despite the environment being tougher on the margin side. The mix of business, some of our better products that are higher yield are growing quite well. So we believe margin expansion to an extent is possible.
Also, sir, we have seen that you have been able to maintain a decent double-digit deposit growth, which is which is unlike your peers what they have seen. So how do you see that coming in the coming quarters? Do you expect to maintain similar kind of growth rate?
One of the reasons of this material expansion in our footprint, as in the branch expansion, particularly in relatively underserved, underbanked areas, in Tamil Nadu we are opening now 26 branches today, almost 20 plus are in URCs. These are all geographies where certainly there is a under penetration and an opportunity to grow deposits. Our growth is, like I said, even paced, and a lot of the deposit growth are coming from geographies where we have relatively modest presence. So ability to grow deposits in those areas, given the product and service levels that we have, looks quite possible, and that's why we are growing at a reasonable pace in branch expansion.
And lastly, since the monetary policy is few days away, how do you see interest rates moving this year? Is deposit repricing remaining for your bank, or is it already passed on?
I think deposit repricing is almost at par with the rate increase that happened, say, 4 quarters back, more or less moderated. the monetary policy, as governor often says, they are quite keen on keeping the inflation within that 4% plus or minus 2% range. And I think very often the message is they prefer 4 more than anything else. So I think with that as the benchmark, inflation being somewhere in the 5, probably the rate cuts are 1 or 2 quarters away. But the MPC can surprise the market one way or the other. But I would believe, given everything we know, it may be more status quo at this point in time. But the message, the tone, we will know based on what they see as inflation outcomes.
Okay, thank you so much, Mr. Srinivasan, for joining in with us this afternoon on ET Now. It's a pleasure having you on the show. And
if you like this video, then like, share and subscribe to ET Now.